I'm going to show you guys how to find the high or low of the day using the Power of Three ICT concept. We're going to be taking a look at the NASDAQ, and I'm going to show you guys how you could have predicted this being high of the day and then capitalizing on this 200 plus point move to the downside in the afternoon and in the late AM session. So the first thing that we need to do to be able to predict high or low of the day is we need to have a higher time frame bias. This is a must in figuring out what the Power of Three is going to play out, because how do you know if it's going to be a bullish Power of Three or a bearish Power of Three? So we're going to go on to the daily time frame, and if we go up to the daily, you could see smart money took out these highs right here. Now if you're new to ICT concepts, above old highs is buy side liquidity. So when price takes out an old high, retail traders that are breakout trading, they're buying up here. Let's say retail got in short right here as well. Well, they're going to put their stop loss in that same exact spot. So when the market takes out this high, the market is flooded with buy orders. Smart money can now go in and sell to buyers at a higher price. So once price starts to displace much lower, we have these lows in place. The same logic goes on here. When price breaks out beneath an old low, retail traders are selling the breakout down here. They're going short beneath old lows. And also, retail traders that went long, their stop loss is going to be beneath this low and beneath these lows over here. So there's going to be clusters of stops beneath these relative equal lows. So that is my daily bias when price is consolidating in this area, that it's going to take out these lows, because smart money needs to exit their short position. So they're going to want to flood the market with sellers beneath these lows and beneath these lows into the marketplace so they can buy back at a lower price. So now that we have a daily bias, when price is forming this up close candle right in here, right, we know that it's going to come down and take out these relative equal lows. So since I do have a daily bias, the price is going to head for these lows and also these lows over here. I'm looking for one specific signature in price action every single day until those lows are taken out. Now, it doesn't mean you're going to be right every single day, but I'm going to show you guys how I was right today with this entry. So you can see that I did enter when price was in this bearish fair value gap right here, and I held for that expansion to the downside all the way until sell side. So this was 12 micro contracts. Now, the specific signature that we're going to be looking for is we're marking out 2 key times of the day, and then we're looking for price to do something as well. So we're considering time and price here. What you want to do is go to the left-hand toolbar, click on the second one down, the trend line tools, and go to the horizontal ray. You want to put your chart on New York time, and you want to mark out 12 a.m. New York time, and then also 8:30 a.m. New York time. So basically, the Power of Three is accumulation, manipulation, and distribution. Near midnight and near 8:30, you will typically get accumulation. What we want to see is manipulation above it. So if we're bearish, we want to see price above or near the midnight opening price or the 8:30 opening price. So whichever one is lower in this case, we could use. So you don't have to wait for it to get above the 8:30 since midnight is lower in this case. But we're looking for manipulation above midnight or 8:30, and we're looking at that as a Judas swing. Now, what's a Judas swing? A Judas swing is when the market goes in the opposite direction just to fake out and manipulate stop losses before continuing towards that daily bias. Now, we had the daily bias that price is going to head down to these lows down here, which is what it did. So the specific signature that we're looking for to indicate that we have high of the day in and it's going to expand towards that daily target is I want to see price go above buy side liquidity. So buy side liquidity is above an old high, and I want to see price create a market structure shift down with a fair value gap and then return to that fair value gap for the entry. From there, we can expect price to just expand. It doesn't have to be the rest of the day, but majority of the day towards that daily target. So let's say the daily target is down here in this example. So what I'm looking to see is I'm looking to see a fair value get created, and a refinement that I have that ICT doesn't necessarily talk about a lot, but if there is relative equal highs above, meaning if it does something like this, then it is low probability. So if we get a high in place and then price gets close to that high, then creates this bearish model, it's low probability in that case. Now, if we take a look at the example on NQ today, what happened? We had a daily bias. That's number one. Price took out an old high. This is the old high over here that I'm focusing on. So if we mark out this one, this is buy side liquidity. The next high up that is significant is all the way up here. So it's not engineered. I wouldn't consider that engineered liquidity. When price comes up, it doesn't look like it takes it out, but it does. If we do zoom in, it goes one tick or two ticks above that high. That is all that is needed. It doesn't mean that it has to have a huge rate on there. I just need to see it go one tick above an old high. Now, it's above an old high. I want to see the 2022 model. So price raids buy side liquidity. I want to see a market structure shift. When price takes out this low right here, that's a market structure shift to the downside. So if you guys do like trading ICT concepts, I go over my opinion on the market every single day in my Discord, which will be first linked down below. I did call this out in my Discord beforehand. So I talked about I like to see NQ start to target the lows below. And you can see price was around the 708 level, and we got a nice retrace to the upside for an entry, and then price started to expand lower. And before that, at 9:50 a.m., this was the high of the day up here. I was looking for price to reverse and take out these sell side levels. So it did play out pretty nicely on that lower time frame. We took another short in here, and price started to expand lower. So if you guys are interested in seeing content like that, plus more educational content, it'll be the first link down below. So what's the next step? It needs to have a bearish fair value gap in that market structure shift leg to the downside. So if we do zoom back over here, price returns to this bearish fair value gap. This is where I do enter. So I enter short here. And now that we have this signature in place, this is going to be high of the day since there's no engineered liquidity above, right? The next high is all the way up here. This is going to be high of the day, and it's going to expand likely most of the rest of the day towards that daily target. Now, in this example, if we go to the daily time frame, that setup took price all the way down to the lows. So I'm looking at the micro contract on this, so it looks a little bit different on the daily, but if we go out to this daily, you could see it does hit that daily bias target. So I'm looking to hold this and capitalize on that daily expansion. So as you can see, price came down and it did take out that daily sell side liquidity down here. And you can see that I took profit beneath this previous day low over here just because it was a low hanging fruit target, and my RR from getting in short here and taking profit here was already very good. So I'm going to walk you guys through the checklist real quick. You have a daily bias. That's number one. Number two, you mark out midnight and 8:30. If you're bearish, you want to see manipulation over midnight and 8:30. It could just be above the lower one. So I would use midnight in this example since it is lower. Then we could see distribution towards the sell side target. So accumulation, manipulation above midnight or 8:30, and then distribution towards the daily target. It doesn't mean, let's say price is all the way up here, right? It doesn't mean that it has to expand and take out that daily target. It's just something to aim for. In this example, we were so close to that daily target with price being right about here. I just knew that that day it would take it out because it was very close to the market price and there was engineered liquidity below. But that's basically the checklist. Align yourself with daily bias, right? If there's a bearish daily bias, you look for a bearish power of three, which is accumulation, manipulation above midnight or 8:30, and then distribution towards the daily time frame bias target. Above midnight or 8:30 or in close proximity to it, you're going to be looking for this signature and price action, which is a 2022 model. A raid on buy side liquidity, a market structure shift to the downside with a fair value gap, and also there cannot be engineered liquidity above. That's the rule set right there. When price retraces up, this is the short before price expands lower for the rest of the day. As you can see, it did already take out that sell side target, so now this high does not have to hold. Why? You just said it was high of the day. Well, it's high of the day assuming that it's just going to expand towards the daily target, but once it takes out the daily target, there is no reason for this to be high of the day anymore because smart money has already exited their short position now. So that's going to be it for this video. Hopefully this was interesting for you guys and hopefully you enjoyed it. If you did, make sure to like and comment down below, and I will see you guys in the next one.